So we have a stupid person, frankly, at the Fed. He probably won't cut today. Europe had 10 cuts, and we had none. And I guess he's a political guy. I don't know. He's a political guy who's not a smart person, but he's costing the country a fortune. So what I'm going to do is, he gets out in about 9 months. He gets fortunately terminated.
Look, from my standpoint, it's not complicated. What everyone on the FOMC wants is a good, solid American economy with a strong labor market and price stability. That's what we want. We think our policy is well positioned right now to deliver that and to be able to respond in a timely way as the data lead us around. The economy's been resilient, and part of that is our stance. And again, we think we're in a good place on that to respond to significant economic developments. That's what matters. That is what matters to us. Pretty much that's all that matters to us.
First of all, we learned, hopefully as children, or I did, from parents who were sometimes pretty strict, that those kind of comments made by you tell people more about you than the people they are directed at. So I think it's sort of an unfortunate form of lobbying, if you will. But I think that in a way it works, and that is as follows. Independent central bank means that you have value and your assets do in the broader world because your central bank is not a plaything of or subject directly to the whims of the government. And in a way, when you use such invectives, you are acting out that our central bank, at least for now, remains independent of our chief executive. Yeah, one has fears. I mean, the big fear in the markets has been that there would be some kind of a shadow Fed with somebody else appointed while Powell is still serving out his natural and defined legal term. Obviously, don't want that. I certainly hope they can come to agreement, but it's also very clear that the macro economy is softening, and that will push the deliberations of an independent central bank headed by Mr. Powell toward a rate cut, which they've kind of indicated. We're going into the third quarter here, and they're kind of saying 2 more for the year. So depending on where we come from trade shocks and political shocks to come versus how quickly the macroeconomy softens, I think we're going to see another rate cut. And they keep telling us another 4 cuts for about 100 basis points or 1 full percent across this year, the balance of 25 and across 2026. Look, I think the dollar's under pressure, partially because of some of the decision-making and policy uncertainty around the White House and Congress. And we're trying to defend the dollar here, although that's not the role. And remember, the Federal Reserve does not serve at the immediate pleasure of the president. Many jobs do. That one doesn't. So that's important. Independent central bank. It's the reason we became a global safe haven for investors. Need to keep that. Super, super important. And second to that, I think it's also important to remember that the bloom is a bit off the American roads and global markets, and keeping the interest rates a little bit higher also serves that purpose. But remember, again, twin mandate, price stability and interest rates, have to reflect that. We still have about 100 basis points or about 1 full percent more consumer price inflation than the Fed targets. So it's a bit elevated. And I think the other issue here is that the inflation risks are significant. So if they're looking for full employment and price stability, this looks like a reasonable course. And it's very, very, very important that the Federal Reserve stay a state institution with gravitas and not seen by anyone, right or wrong, as a plaything of the executive branch. That is the cornerstone of American asset supremacy for 100 years now. The more mercurial and passionate the White House is, the more important a dispassionate and staid approach is from the Federal Reserve. They're kind of complements that way. And so last thing I'd say is just definitionally, if you have a sort of dramatic and mercurial White House, it's important to have a not dramatic and not mercurial Federal Reserve.
So the president did nominate Jay Powell in the first place, and he has called him stupid, incompetent, too late, Powell, a number of names. I'm not a big fan of the name calling. I think we were all brought up not to do that, but that's how this president rolls. He uses rhetoric to try to get his way. But I will say that during Jay Powell's tenure, he's overseen 3 bear markets. Now, I'm not saying they're all his fault, but I am saying some of it is due to policy. At least 2 of them, the 2018 bear market and then again the 2022 bear market, were due to just bad policy decisions from the Fed. So, or at least that accelerated them. So I think I understand the president's position, but as we all know, he appointed Jay Powell. He claims he would not have reappointed him, and that President Biden did. But my guess is he just may have, and so it's a dumb argument, and we should be talking about more important things. The president today said that rates should be 200 basis points lower than they are now. I don't think that's correct. That's the voice of a real estate developer from New York. Lower rates are always good in their minds. But he also suggested that maybe he should appoint himself to the Fed. So I think you have to take everything the president says on this particular topic with a grain of salt. There is no love lost between these 2 men, Jay Powell and President Trump. And so while that should not enter into the equation, I can't help but think it might be, and that the Fed it may just stay higher for longer because they can.